July 4th. Aime at pre-market. Last week, the debate between Biden and Trump ended in a disappointing manner, which not only intensified the public's concern about whether the elderly Democratic candidate could successfully run for re-election, but also quickly sparked discussions about his possible withdrawal from the campaign. These discussions quickly caused ripples on Wall Street, and the market showed a keen interest in the so-called Trump effect. Here are some of my analyses of this phenomenon. U.S. dollar strengthens. Trump promised to raise tariffs and take a firmer stance on immigration issues, which increases the possibility of rising inflation and a strong U.S. dollar after his election. This trend may have adverse effects on other currencies such as the Mexican peso. Since mid-July, the euro has fallen more than 5% against the U.S. dollar. Short-term Treasury bonds become a safe haven after the debate in the U.S. Treasury bond market with a scale of $27 trillion US dollars. Fund managers have turned to short-term Treasury bonds while reducing long-term bonds. This strategy has been endorsed by many Wall Street institutions. Stock market performs strongly. It is generally believed that the Republican Party is more business-friendly, so health insurance companies such as United opening parenthesis on H.US and Humana Us, as well as banks, may benefit from a more relaxed regulatory environment. In addition, due to Trump's support for the oil industry, energy stocks such as Occidental Petroleum opening parenthesis Oxy.US have also risen after the debate. Private prison stocks such as Geo Group opening parenthesis Geo.US have also benefited from their tough stance on immigration policy. Financial ETF market is active. The market expects that Trump's election will relax financial regulation and may cause the Treasury yield curve to become steeper. The Financial Select Sector SPDR Fund XLF last week welcomed the largest inflow of funds in more than 2 months, with investors adding about $540 million US dollars. In the latest fluctuations in the interest rate market, investors have added another $611 million US dollars so far this week. Cryptocurrency market is boosted. Trump recently met with cryptocurrency industry executives and promised to support all Bitcoin mining activities in the United States. This could make some cryptocurrencies, such as Solana tokens, potential beneficiaries. As the 5th largest cryptocurrency with a market value of about $67 billion US dollars, asset management companies VanEck and 21 Shares have applied for ETFs to directly invest in this digital currency. For specific sectors that benefit from Trump's policies, you can ask me like this in Aime. Today, the largest cryptocurrency, Bitcoin, fell by 2.7% and later retraced to a 1% drop, trading at $58,880. At one point, the price of Bitcoin broke below the $60,000 mark. With 3 consecutive days of decline, the price is approaching levels not seen since February of this year, and the market is showing signs of pessimism. The reasons can be attributed to 3 main factors. Firstly, Mt. Gox plans to distribute approximately 142,000 bitcoins, worth nearly $9 billion, to creditors between July and October, which could exert pressure on the market. Secondly, there is political uncertainty in the United States, such as the possibility of Biden withdrawing from the race and the potential return of Trump, who is more crypto-friendly, affecting market sentiment. Thirdly, Bitcoin miners are facing financial pressure due to the halving event and may respond by selling tokens. Analysts indicate that Bitcoin's price is slightly below its 6-month moving average. Although investors overall are in a strong profit-making position, short-term investors are mostly at a loss, and the market volatility indicator has decreased, signaling potential greater fluctuations. I advise everyone to be cautious with Bitcoin investments in the near term. For a detailed interpretation of the reasons behind Bitcoin's decline, you can ask me like this in Aime.